1150 and the 1110 put that I showed is in an inflated area. So deflated versus your inflated trade that's paying you the world right now. It's paying you more money by understanding market tops, but you have a job to do. As a risk manager here, as an SMF Pro trader, is that now you got to start looking at the other side of the market. Because what will happen is, as we have shown and done many years, different cycles, is that what we do is we'll get on the other side of our position, provided that the S&P hits a support level that warrants the trade. If it does, we will immediately and proactively put that trade on. And if the S&P wants to go higher and it looks like we're going to get support and the market wanted to move, we would cash in the put and let the call run. But we would be building the call side of the market against the put side of the market. And not only that, this 1100 put, or I mean $1,100 call, people, $55 a contract. The people that had the calls, they wrote them down. I bet you they're quite miserable today. And they should be. They did not choose to learn or interact with the right trade management. So the suffering, in my view, is warranted. Okay? Nobody makes you ride the call contract. So it's deflated. That deflated contract will be a buy against my short somewhere here in the cycle. And we'll be covering a lot in the options market. Inflated is up here. Things you don't know. I can sell short that just like I do a stock and buy it back here. Things you don't know. You have to have, number one, you have to have $1 million account. Number two, you have to have special permissions to be able to do this kind of stuff. This is what market makers do in the option pit. This is why the public, if they got lucky and they were trading the calls on the S&P, they didn't sell them up here. No, they let them ride down. Then they said, well, oh, maybe tomorrow they'll bounce, but they didn't, and they continue to go down. At that point in time, the trader is, his head, his psychological demeanor is broke. Oh, well, damn it, I better give it one more day, and then look what happens. So, people that a winning trade was that during this month, these contracts were never lower than $25. Well, now they're at $8.50. So they went from 25 to 55. Great trade. But what did people do? They didn't get on the other side of the market reversal, buying the puts like we did. And not only that, they took a winning trade and turned it into a miserable losing trade.